Okay, folks, welcome to Market Wrap for Monday, the 7th of March. Okay, I don't have a lot of good news today. I wish I did, but I don't. The House set to hold eminent vote on ditching trade relations with Russia and Belarus, including oil imports. Folks, it's gonna be a nuclear. Pardon this analogy. It's going to be a nuclear bomb going off in the oil markets if they go through this path of putting a ban on Russian imports. I'm not sure this includes gas, meaning natural gas, into Europe. That's their primary source of heating. I couldn't imagine that it does, but if were I Putin and you're going to ban my oil, well, guess what? I'm cutting you off of gas, but maybe that's what they want because that would be an act of war. I just keep getting the sense that we have idiots, absolute and utter idiots running the EU and in the U.S. government because there's no effort to negotiate. All it is create more stress. It's as if they want to create an incident. And one place where I'm pretty sure it's going to happen is in the debt markets because things are getting very, very ugly, very, very quick. And it's already hitting the derivatives market. The derivatives market is a wager on a wager on a wager. All right, so nobody knows who's got counterparty risk. So this headline here, the market is totally dysfunctional. Traders concerned Russian CDS, that's credit default swaps, won't pay out in the event of a default. Now, I don't think that the Russians are a big player in the CDS market, but that's just me. What do I know? The question I do have is who has an overweighted position to these credit default swaps, and how does that impact the rest of the market? Now, I did a screen tonight for oversold stocks, and Credit Suisse, which is no great shock. I knew that they were exposed to Russia. They are getting pounded. This is the type of price action that you see on a bank that's about to go underwater. I would say, looking at this chart, that Credit Suisse has ongoing concern issues. We appear poised to break down below the lows of 2020. And when you get a major bank trading down in the low single digits, you really need to be worried about that bank. Now, maybe there'll be a life preserver sent out. Probably will have to be. I mean, this is a very, very large institution, and they'll get a bailout. But that anxiety is going to build and build and build on this market until that life preserver gets thrown to them. And this is not the only bank out there that's in trouble. Deutsche Börse, I don't know this company, but it's getting annihilated. That's a German bank. Societe Generale, this is a French bank, getting crushed. Trading down below $5 per share. Swiss Re, a reinsurer, getting hammered. Look at this, RSI 11.44. Look at the institutional distribution here. This is the market sending you a signal, folks, that all is not well. Swedbank, I'll make this the last one. RSI below 15 now, trading as if it's going out of business. Let's bring up the XLF. This is a weekly chart. And when you take a look at the XLF, you really need to appreciate that this price action this week is a critical break of the banks because we have taken out what has been pretty good support since May of 2021. So avoid the financials, folks. Avoid like the plague. Now, on Sunday Night Futures Live, I spoke about the yield curve, and the yield curve continued to drop like a rock today. And I also spoke about the volatility index for bonds, which is the MOVE index. And last night we were at 131. We closed out the day at 140, the highest read since back during the financial crisis. So these are all clear indicators, whether it be the price of the banks, the break of the XLF, which is mostly U.S. banks, and the bond fear index, that we need to buckle up and get very, very small to the long side. If you're long, think about staying off a margin. Remember, during volatile times, your broker could just up the requirements on any position that you hold. It could be trading today requiring 40%. Tomorrow it could be 50, 60% cash requirements for that position. So please be very, very careful. Moving on to the yield, 10-year yield. Actually closed up today, which I was kind of surprised to see. But I don't think it's going to stay there. I think we're probably going to break lower. The tips, Treasury inflation protected securities, very close to new all-time highs. Inflation on a tear. I think it's a foregone conclusion that we're going to break out to new higher highs. The dollar, very overbought, but with fear like this, it can remain overbought. And when I say overbought, I'm using its proximity to its third standard deviation Bollinger Band. Volume very heavy, so clearly under accumulation, for now anyway. The VIX, we're going to 40 here. That's my call. I think we're going above 40 in the very near future, unless, of course, they come out with some sort of a ceasefire, some sort of a deal to diffuse this major crisis that I never thought I would live to see over in Europe. The Dow transports, folks, we were talking about this a couple of days ago, how it looked as though there was some sort of strength going on here. They rallied on Friday. They closed it back above support. The transports today were just utterly annihilated, down nearly 4% on the day. And it looks as though we're going to break lower. Volume, very, very heavy. And remember, as go the transports, so goes the rest of the market. The S&P 500 indicators, your RSI, your Stokes, price, all saying we're going lower here. Volume, very heavy. The Dow Jones Industrial Average, daily chart, very similar to the S&P 500. In fact, identical, very weak, and they appear to be getting ready to go lower. Big, big volume. Institutional distribution. The small caps. Is your double top, lower high. I think we're going to break to new lower lows on massive, not massive, that's being hyperbolic. I don't want to be hyperbolic. On above average volume. MACD looks like it's going to go negative again. You don't want to see these lower highs on Stokes. Harbinger of bad news. And I want to spend a moment here looking at the weekly chart of the small caps. For those that think that, we've seen the worst in the small cap names, they've really gotten beaten to death. The mid cap names, the Kathy Wood names, I should say, Kathy Ark. Folks, they're going lower. They're going a lot lower. We had a dead cat bounce here on the small caps. We are rolling over. Remember, we drew this line a few days ago because we were looking to see whether or not we got a breakout or we got a lower high. It looks as though we're getting a lower high. Now, this is a weekly chart. It's only Monday. 4 trading days left to go, so a lot can happen here. But as it stands right now in this snapshot in time, things are not looking good. Technology, daily chart, crushed, very weak, and probably going to go lower. I'm pretty confident that we're going to break below the February lows. The triple Qs, of which we are short of, we got net short of the Qs on Friday. We've also been selling naked calls on the TQQQ, the leveraged ETF, and it's working out pretty well. I think that we are in all probability going to take out the lows of February. This head and shoulders setup, left shoulder, head, right shoulder, we have clearly broken the neckline now. We were down on volume. I expect this to rise. RSI, lower highs, no lower lows yet. Stokes, this is just horrible. Consumer discretionary names, you got to avoid these names, folks. With inflation at the fuel pump and at the grocery store running so high, there's no room for for discretionary names in your portfolio. Energy, daily chart, up another nearly 1.5% on big, big volume. We did close off the highs of the day. We're very extended here. Now, I want to pause here for a moment, and I want to remind everybody of what happened this morning. We had news come out about talks going on over in Europe. The Russians had put a proposal on the table, some demands. They were reasonable demands. I think the market interpreted them as being reasonable. And what we saw was a pretty big sell-off on energy. And my other observation was that we saw the same with the gold mining stocks is Nugget. All right, so here's this morning. They sold them off. So while we rebounded, the point I'm trying to make is this, is that I believe there's going to be a ceasefire agreement. When that ceasefire agreement is signed, sealed, and delivered, you can bet your bottom dollar that the gold stocks, as much as I love them, oil stocks, they are all going to correct, and probably pretty viciously. So we've done very, very well with the gold mining names. It's time to think about scaling out a little bit, perhaps using a trailing stop loss order, maybe a 5% trailing stop loss order on NUGT, GDXJ, a 3% trailing stop loss order, and let the markets take us out. And then on that pullback, we want to buy back in. Back to equities. Emerging markets, crushed. The rising US dollar, these are becoming attractive now. RSI 24.92. Where do we have historical support? Right at around $45 per share, in that neighborhood. We'll see whether or not that holds. Gold. We tapped the 2,000 mark today, closing up nearly 1.5% on big, big volume. Let's take a look at how we look on a monthly chart. Beautiful chart. Beautiful chart. Now a daily view of our GDXJ, strong day, up over 2%. We broke out. Here's our W formation. We closed above the pivot point at 47.36 on big, big volume. This is what we wanted to see. Nugget, RSI now at 76.82. Haven't seen that in a while. Big breakout today, up over 5.33% on the day. So these trades are working. Silver, daily chart, up over 1/3% on volume. So we're going to remain long here. We don't have a parabolic move yet on silver. The silver miners, up day, so a little bit of topping action at resistance, right where we have our pivot point of this W formation. And that's okay, it's expected. Gold money closed up a 1/4 percentage point. Cal-Maine Foods, reversal bar on volume, no less. So, we've been watching this one. We have a profit here. We're not swing traders. We're investors in this company. But we've been warned about topping action by the charts for the past several days. Friday was a bit of a head fake. So just be careful here. We may get a pullback on Cal-Maine Foods. All right, TQQQ, we have naked calls, which is a short trade. On TQQQ, we booked profits. Today rolled down to a lower strike. So we are very short of the triple Qs, both by selling naked calls and by purchasing the put contracts outright on the Qs. So we're pretty aggressive here. And it looks as though they want to go lower. LABU, daily chart, closed down only a dime today. Knock wood. So on a relative basis, the price action here was very, very favorable versus the S&P 500. And they were down on big volume, but they spent a good portion of the day up. So we'll watch and see whether or not we hold this higher low or do we break to new lower lows. PayPal. All right, so we are now net short of PayPal. We booked profits on our put hedge, our long put hedge. We took a loss on the calls that we had sold, the puts that we had sold. And you may be asking, why did I book profits on the put side and not just have it act as an insurance policy? The reason is that they expire Friday. So if these shares pop up for a day or two and just sit lethargically and do nothing, our strike price was at 93.50, and the time decay on those options would have just vanished. So I decided, you know what, I don't want to fight this market. I thought the probability of us closing down to new lower lows versus February was very favorable, and that's exactly what happened. We took out the lows of February and we closed at the lows of the day. Therefore, we're going lower. We'll maintain our short position on PayPal. We did book profits as well on a higher price naked call. We rolled that strike down, and we'll continue to do that for the foreseeable future until we hit a support level. Ocean Power Technologies looking pretty good here. Indicators looking strong. Resistance at 140. Let's take a look at a weekly chart. Monthly chart. I think we're just going to watch this one for right now. We're probably putting in a higher low here. We'll keep an eye on it. So in closing, folks, it's so critical in investing to focus on management. The same thing holds true for your leadership, political leadership, and my confidence level is a negative. It's a negative number with the governments here in the United States and in Europe. How they could push the envelope this far is incredible to me. It's a man-made crisis. I've been pointing out man-made crises for the past year or so. Everything that we do is self-imposed. We could have avoided this tragedy by virtue of the fact that we are continuing to push propaganda that the Ukrainians can win this war is ridiculous, and all they're doing is causing a lot of harm to civilians, and it's very, very sad, and unfortunately, this is not going to end well for many, many people, and I'll speak more towards the investment community. This is not going to end well, so please just stay small in your long positions, and for that matter, in your short positions, try to stay off a margin, okay? Because you have your senior partner is your broker in that case. So with that, everybody have a great night, and I will talk to you tomorrow. Be well.